it's Friday, March the 13th. I don't know if you're superstitious, but the market is defying logic. We have an active war in the Middle East, and yet the oil prices seem to have dropped back below $100 this morning. And if you're an investor, you need to know why and if this is in fact a trap. So let's get right into it. Yesterday, Brent crude it crossed $100, and Iran's new leader has threatened to keep the Strait of Hormuz closed down, essentially shutting down 20% of the world's oil, right? But the White House has, it's saying it's going to release 172 million barrels of oil into the market. So that's kind of going to be helpful. And they also issued a 30-day license for stranded Russian oil to flow, right? So this is kind of a supply shock that's intended to crush the price spike before the weekend. Now, the strategy that we want to follow is software and steel. So while oil prices are continuing to be volatile, the defense sector is on a different path, right? Congress is fast-tracking emergency funding for the Golden Dome missile defense systems. So instead of chasing the oil spike here, I think it's probably a good idea to look at the defense technology and look into the companies that are providing the sensors, the interceptors, because they're the ones that are guaranteed revenue in this environment, right? So the Dow is down 1.5% for the week. We're seeing a very high-risk weekend. Highly recommend you stay diversified. Do not panic. Don't panic by the headlines, right? So go ahead, stay safe, stay smart. Some of the things to keep in mind is that we expect, and that's just something that we expect, the oil price to sort of stabilize the next month or so. So it doesn't look like oil is going to be under pressure after in the long term. Okay. Thank you for watching. Have a great weekend. Bye now.